Hey everyone, Paul Clark here, and in this video I want to talk to you about Mowi Seafood. So this is going to be ticker MHGVY, and this is my favorite investment that I have overall. It represents the most amount of money I've invested in any one stock in my portfolio. I own 750 shares of this, which as of the close on September 25th, on Friday, that was valued around $12,500. Certainly not, talking about a hugely significant stake, but wanted to let you know what I actually own of the company. And of course this video is, really for educational purposes. This is also a video of me explaining why I like them. If you want to actually invest in this company yourself, you should absolutely do your due diligence and be able to say that, hey, you're making that decision because that's what you want to do. And by the way, for all investors I talk to, I really challenge them to understand why they're investing in a stock, right? And I think the best way to do that is to answer two questions. And I really believe that if you actually answer these two questions, that you're going to be head and shoulders above a lot of other people in the market who are just buying because other people think that they should, or because of trends, or because you're hoping the price is going to go up. And those two questions are, one, quite simply, what does the company do? Can you explain what the company does? And do you fully, truly comprehend what they do? And number two is, why do you actually want to own the company for the next 5, 10, 20 years? Like, what's your long-term reason for wanting to own that company? And I think those two questions are really important to understand. And so with Mowi, I feel like I can answer both of those pretty easily. And, first of all, it's a fish farm, so they actually breed the fish, they raise the fish, they feed the fish, and then they turn those into consumer products. They're, products for food service and products for retail. Okay, so nothing too complicated about what they're doing on that front. But I think the more exciting component is the second question, and why do I think they're a good investment? Well, our world's oceans and lakes are being overfished. There's a rising population and there's a growing demand for seafood around the world. And I don't really think it's sustainable in a healthy way to be able to continue to rely on overfishing, or to continue to rely on ocean-caught fish to be able to satiate the demand for seafood around the world. So then enter, fish farm companies like Mowi, who happens to be the largest producer of Atlantic salmon in the world, okay? But enter a company like that, and then all of a sudden you're able to say they're able to breed the fish, raise the fish, and have a sustainable solution instead of just relying on the overfishing. Now, I think that we're going to need to increasingly turn to companies like Mowi more and more. And the fact that they've been doing this since 1964, they've gone through some name changes and some mergers and things of that nature, but really they've been in the fish farm game since 1964. They've got a lot of expertise in what they're doing. And they've been quite successful. So I think they're going to be the company that's going to really benefit from that trend. Now, they're currently, though, they're currently in a situation where the prices for salmon and the prices for what they're selling are actually lower than what they have been. In 2020, of course, has been a pretty crazy year. I do believe that that's going to be an anomaly, and I do believe that when you kind of look at it from the demand that's occurring in the world, from increased population growth, increased demand for seafood, and you kind of again balance that between a sort of fixed supply in the world's oceans. I do think that long term, or even medium to long term, that you're going to be looking at Mowi having a favorable price per price that they're going to be able to sell at, which is contrary to what they're currently dealing with. So I feel like they've got some temporary issues, but the long-term situation for them looks quite good. So that's why I love this company, and I'd love to talk more about it with you. So let's keep digging into this, okay? Another thing that I like about Mowi, by the way, is that they really, throughout their reporting, when you read their quarterly reports, their annual reports, their investor presentations, they're really focused on sustainability. And they point out, and they want to call out, a little self-serving, mind you, they point out that, their products are salmon. It's something it's easier, as far as, resources on the planet, it's actually easier to produce salmon than it is to produce a lot of like farm animals and chickens and pigs and things of that nature, right? So they're really kind of calling out that, hey, if we can actually shift a lot of people into eating more salmon or eating more fish, that the world would actually be better off. The environment is going to be better off. So and even there's something called a Fair Protein Index, which actually looks at 60 global companies, like Hormel Foods is on it, for example, and Mowi is actually number one. Like they're the highest rated fair protein company out there, and it's just something that the company, again, they go out of their way to really report on their environmental impact and wanting to be a sustainable company, and I really think it's refreshing to see because, I think that we all know there are a lot of companies out there who don't necessarily put that as a priority in their business model. I'll tell you, I also like the fact that Mowi is based in Norway. So they're headquartered in Norway. Again, that's where they started their fish farm operations going back to the 1964. But what I like about that is, when you think about the turmoil ahead, you think about the results of the election coming up in November here, 2020. There's a lot of uncertainty and there's a lot of kind of fear around that. And the fact that this is a company based in Norway, I feel like to some extent they're going to be able to kind of sidestep some of that drama and some of the price volatility around that. Or at least that's my own personal expectation. But I kind of like that they're kind of just out there, a little geographic diversity for American investors. Now, let's also talk about the price of this. And I feel like I want to be able to communicate the value of this stock in terms of the dividend it was paying, and the fact that it's not currently paying it and what could happen if they reinstate their dividend. So currently Mowi is trading around like $16 and change in that range, which is actually a really favorable price. I mean, this was trading as high as $25, $26, before we had again the craziness that 2020 has brought us. But when we think about that, I went back and I looked at what the dividend was being paid on average for the past 3 years, and it works out to be about $1.30 that they were paying in dividends per share per year. Okay, so let's say that it takes a year and a half for them to reinstate their dividends, because like I said, I fully expect this company to get back on track. Well, then what are you looking at? You're looking at having a company that, based on today's investment, with that $1.30 being able to purchase this at about 16 something, okay, you're going to be able to find the yield on that, if and when they're able to reinstate their dividend in whatever amount of time there, you're going to basically be yielding about 7 or 8% based on today's dollars investment, which I feel like that's another good way to kind of think about when you're investing in dividend stocks, is thinking about what your original cost was and the yield you were able to get on that, okay? And so the fact that you're setting yourself up with a company like this, where yes, if they go back to paying about $1.30 a year within the next year or two, that you're going to get 7 or 8% on the dividend alone based on today's dollars invested, I think that's a really good opportunity and a really good value for this company. And again, that's to say nothing about the share price increasing at all, which I certainly expect it to do. This is a company that has more than doubled their revenue from 2010 to 2019, and not just more than doubled it, but they've consistently increased their revenue along the way. So I think that they've shown the expertise, shown that the trend and the move to relying more on farmed fish versus ocean caught fish has been certainly something that in the last 10 years has really kind of played out in terms of their financials. There's a bit of a hiccup in the road here, a bit of a hiccup with 2020, but I certainly expect them to get back on track to growth. So certainly think it's a good value. All right, so let's go a little bit more into about Mowi. So again, they're headquartered in Norway. As we mentioned, that they actually started their operations, or can trace them back to 1964. And they also, in January 1st, 2019, they actually rebranded themselves from Marine Harvest to Mowi. Okay, and the reason behind that was because they're they're rolling out a global brand strategy where they want to be kind of known as Mowi around the world for their retail segment and things of that nature, because they're really kind of they don't have a high penetration in the United States, which I think at this point is actually exciting to know that they've been able to have their success, and that it's mostly been coming from Europe. and the fact that they have a long runway in the United States, which I think has had a growing demand for seafood and sushi and things of that nature. So I absolutely expect them to be able to be successful with that, and I think it represents even more upside for the stock when you look at the next 5 or 10 years and beyond. And here's an interesting thing too about the actual product they put out about their salmon. So because they're controlling the breeding and the feeding, and they've been doing this for a long time, and again they're pretty good at it, they're able to, with the Mowi salmon, they've basically, with that feed that they're giving them, the actual fish itself has about 20% more omega-3 than what your typical ocean caught salmon would have. Right? So I think there's actually even just some health benefits alone just from how they're able to kind of control what the salmon is able to eat or the fish is able to eat. And, from what the company's at currently, putting this in perspective, so I mentioned that they're actually the world's largest producer of Atlantic salmon already, but that actually represents about 2.5 billion meals a year that they actually put out as a company. So 2.5 billion meals that they're responsible for, which is pretty impressive. And again, as mentioned with the United States and their kind of under penetration, I think that there's even more room for that to grow to many billion meals to come. Okay, so Mowi, we can also talk about them in terms of, what the breakdown is between their food service and then their retail segment. They're involved in both. Certainly their food service has been hit harder than what the retail segment has been, with 2020. With that in mind, though, they're actually seeing some stronger numbers in their retail segment where they've called out that there are customers who had not previously been purchasing or trying salmon products, or trying theirs at least, that now actually are doing so, from more time at home, less eating out, of course. So those things are actually helping their retail segment. So when the food service comes back, I think that will certainly get back on track. But then I think they've also kind of been able to help themselves to reach new customers with the events of this year. So that ultimately could actually be a positive thing for them when things start to normalize. Okay, so let's also talk about the actual Q2 update. So with their Q2 results for 2020, one of the biggest things is the board of directors, reiterating that in Q1 and Q2 they decided to no longer pay their dividend. They were consistently paying a dividend before that. I'm fully supportive. I understand that, focusing on the liquidity, focusing on surviving this makes sense to do. And if they have to pause their dividend for a few quarters or for a year, whatever that might be, I think that fully makes sense. And if anything, I think that actually represents a good opportunity for you to buy the stock while they're not paying the dividend, because certainly I think when they reinstate it, I would fully expect the share price to be increased based on that news. So how bad was it? When we look at Q2 revenue, it actually decreased by a little over 10%. So I think you can also look at it from a glass half full and to understand that they were able to retain 90% of their revenue in a crazy quarter like Q2. So being able to retain 90% of that certainly doesn't sound so bad. Certainly when you put that in context of cruise lines and airlines and a lot of those other situations, they would have been very, very happy to be able to retain 90% of their sales. And then you look at EBIT for Q2, that was actually 68.8 compared with 193.8 million euro, and that was driven primarily because of lower prices. So there were less demand kind of overall with the events of 2020, which led to lower prices. But again, as I kind of mentioned, I expect that to be a temporary situation. We can also talk about, so the company has a target return on capital employed of 12%, and in Q2 they were able to actually still beat that target. They were able to achieve a 12.2% return on capital employed, which I think that that shows some strength in and of itself. It's a really strong number, especially with the events going on. So return on capital employed, and that's just saying, that's looking at your EBIT, so your earnings before interest and taxes, and it's taking that number and saying, what assets did you use to be able to achieve those earnings before interest and taxes, and then that ratio is your percentage. Okay, so that is a little bit about the company. That's a little bit about why I like them over the next 5-10 years. I really believe that this is going to be a company that at these prices, for me, I'm fully expecting to look back and say that on my cost of buying the stock today, that I'm able to earn a return on the dividend between 7 to 8%, really at a minimum, and I fully expect the share price to be able to return kind of back to the progress that it was on. And I expect these fundamentals, in the market forces behind this to be driving the stock higher for a long, long time to come. It's one of my favorite investments. I really, don't see a lot of holes that, can be poked into this one. I'm excited about it. I was excited to share it with you. So any questions, comments, go ahead and let me know in the comments below. And love to hear from you. And thanks for watching.